My name is Steve Ruffley. I'm the CEO of iView Charts. What I'll go over today is some interesting kind of ideas I've got. I've been doing this stuff for a long time, and there's pretty much nothing new in trading, but there's certainly new ways of looking at the information. Very interesting to listen to a little bit of Dave's presentation before. I've actually written a piece of software for Metastock, so I've worked with Dave and the guys for a number of years. So these things, again, are very interesting how we keep trying to push these technological boundaries and trying to get more out of the information. I've got a few basic ideas about trading, and I think what I'll do is I'll go through my very short presentation just to give you the risk warning, the standard things I have to do. Then I'll give you my idea about how I see the trading world. There's a big difference between retail and institutional. I've taught both, so again I'll put these points across, and then I'll show you exactly how I built products for like Metastock and MT4, etc., etc. And I'll show you that everybody can use the information that's accessible to everybody for free. It just takes a little bit more time when you have to do it yourself. So I've got some interesting ideas as always, and I've got a fairly unique on the view on the markets and how these things should be approached. But I think it'll follow the theme as many other presenters that we're going to have before me and obviously after me. But I would say that everything I do is slightly unique in that everything I do is my own money. So I've made money in trading for the last 14 years. Everything I do software-wise, I pay for my own money. I have no investors. Nobody tells me what to do. I'm Steve Ruffley. I'm it. Yeah, the buck stops with me. So I've done thousands of webinars. Lots of people follow me, and it's because I give the truth. Yep, trading is difficult, as Dave rightly said. It is difficult and it's hard for people to succeed, especially when you're just the average retail trader. What you have to do is follow a plan. That's very important, as Dave said. And you also have to have a structure and a framework. And that's what I've tried to do with my iView charts and all the presentations, all the literally hundreds and thousands of hours that I've done is designed to give you that head start and not make the mistakes I made as a beginner trader and a young trader. Take that information and then go off and build your own strategy. So again, I mean, a little bit of my background. I'm a professional trader, I'm a professional risk manager, and I manage the biggest trading floor in Europe, Schneider's in the City of London. Chief Market Strategist Intraday.com, which are FTSE 250 listed company owned by Bwin Party. I own TraderMaker.com. I have the Metastock add-on that I've just told you about, and the creator of iView Charts. My book's due to be published in January, February. I'm just going through the editing stage at the minute. Any advice to people out there? Don't write a book. It's really hard. And yes, I've been nominated for the Forex, best presenter. That's just by to be honest. Now, just to read the risk warning, just in case. If there's any kind of comeback, but spread betting and CFD trading carry high risk or capital, resulting in losses that is might be suitable for all investors not intended for people of age 18. Please ensure you fully aware of the risks involved and necessary to seek independent financial advice. The content of the webinar is personal opinion of Steve Ruffley. The content is not constitute financial investment or tax advice. I recommend that you should show specific requirements to independent financial advisor prior to entering any bet. So again, I'm here to talk about my strategies, and I'm not here to plug particularly my software. To be honest, I'm not that interested. I make plenty of money out of trading, so everything I do is purely, I would say, for ego. It's nice to be featured in Bloomberg, Reuters, be on TV, write books, that kind of stuff. I make my money from trading, so I will show you how to make money from trading, which most people don't allow you to do, but I'll show you because I'm a nice guy. So what we're looking at right now is just standard Metatrader charts. Okay, so throughout the years when I was teaching people to trade, we had to spend a lot of money, to be honest. We had to spend a lot of money on a lot of expensive kit, a lot of hardware, a lot of very powerful charting tools, and that just isn't the case these days. In 2014, pretty much everything you want is free. All the expensive feeds I got from Bloomberg, Reuters, you can get on Twitter. All the charting software that I used to use, like CQG, etc., etc., you can do through MT4. Pretty much all the things you want. Even Metastock, it's not a great system, to be honest, for charting, I don't think. And again, I work with them. I think there are better things out there that are free. But I mean, that's just my personal opinion. So what I would say is that what you need to do is part of your plan is find out what bits of information you want. Find out what you think suits you. So that can be from the fundamental side, your news sources, or your technical sides, your charting sources. And for me, the majority of the best information will always demand a price. But I would say for the average retail trader, you can get a good enough setup to act like a professional trader for literally next to nothing. Okay, you might have to pay for a little bit more of news feeds and data and live real-time stuff like you do on Metastock, because that is real-time stuff. I mean, just to say that you get the real live market prices is great. But also, when you're trading off a spread betting platform, you're only ever trading representational prices. You don't have direct market access. You're trading off a spread. So does it really matter that you have the latest up-to-date information? You know, that's really, really questionable. I would say the average retail trader's main mistake is they trade off the wrong time frames. They think because they're a day trader, they should be looking at minute charts and 5-minute charts, tick data even. Absolutely pointless. You know, if you're trading off a spread, then what good to you is a tick price? It doesn't exist. You can't get it. So why bother looking at it? I would say that for the average retail trader, we need to be focusing around the hourly signals and 15-minute candles that build up. And again, it's probably best that I show you. I mean, what I'm going to do today is go through some of my core reasoning for how I've developed my strategies, my signals, my software, how I've made my money. And when you see it, you'll think, well, that's obvious, Steve, isn't it? You know, that's what everybody does. And it's not. It's not obvious, is it? You know, the whole point of why we all do anything in our lives is to learn, you know, to try and replicate and try and improve upon. As human beings, we're kind of pre-programmed to take a difficult task like trading and try to make it easy, okay? Try and find our own way. And some people just aren't equipped to do that. So what I'm trying to do is give people an idea of how I came up with my techniques. And this isn't just how I came up with it for my techniques. This is how I came up to it. I changed my view. Instead of looking at what only I know, I look at what everyone knows. Okay, so it's going back to the real core roots of self-fulfilling prophecy and technical analysis. If everybody knows the rules of the game, then you know you can understand how people get caught long, how people get caught short. So it's understanding what people do and then trading around it. I'm going to take gold as an example. Now this is a standard Metatrader chart. It tells you very, very little. Okay, very, very little at all. I'll just make this a little bit more colourful, just because it just helps, you know, the buying and selling the different candles. I'm going to start and show you now how I would come up with any kind of theory and thinking about what could happen in the future based upon the past. Okay, goes back to self-fulfilling prophecy, the certain indicators I use, and how we build a picture. So this is gold. Now I've been quoted in the Financial Times. I wrote an article September of 2013 that by 2015 gold would be at $1,000. Well, there we go. I don't really need to say much more than that. You know, it's not $1,000 yet, but we're also not at 2015. And I tell you what, by 2015 it's going to be closer to $1,000 than it is $1,900. There's a few reasons for this. Now it's easier now we see the monthly chart. Now I would say that the first thing I do is go back to my basic, my core, Fibonacci. Now Fibonacci is a great tool. Great tool if you use it in the right way. A lot of people stumble across Fibonacci and think, oh, well, it works at certain times and certain periods, so I do and don't use it. The whole point is, with Fibonacci, it's a set of mathematical rules, especially the Fibonacci retracement. Now, I'm sat here now in my office. If you put your forearm, against your foot, that is the same size. Now, the reason for that is Fibonacci proportions. Now, Fibonacci, you can see it in nature, you can see it in mathematics, and it's been around since time began. Since man could understand what man was, what they were trying to achieve, things like Fibonacci sequences came into play. So I would say that the up move for gold started here and went to a high here. That's not difficult, is it? That's not very difficult to do. Pick a significant low and a significant high. But what we do with it now, that's what's important. Now my rule of Fibonacci is 80% of the time, a strong directional move will retrace to the 50% mark. Okay, where's that 50% mark? It's here. In gold, that's at 1310 spot 32. Now you tell me, does that act as a pivot point? Is that a point of attraction? It'd be very difficult to argue with me that it's not. Okay, when the market comes up, support, resistance, market goes up to make new highs. When it comes back down, certainly the market is oscillating around here before we finally reject a close above it. Can't go on to make new highs. So if we can't go on to make new highs, we have to go and make new lows. So that means that our $1,000 target, which is, you know, a key fundamental level and technical level, will be hit. So that's here. So we've got not a great deal, to be honest, to go now. You know, it still sounds a lot, doesn't it? You know, we've got, you know, $162 or so. Sounds a great deal, doesn't it? But it's not. And the quicker it starts to get there, you know, the less likely it is it's not going to hit, because markets just oscillate between my 80-20 rule. And my 80-20 rule is that markets move 80% of the time in a technical manner, yeah, and 20% of the time in a fundamental manner. So fundamental is economic data, sentiment, news, but 80% of the time it's still going to adhere to to technical levels, support, resistance, you know, all the kind of things that we need. Because the fact of the matter is, if markets don't move, people don't make money. So you don't go to your desk if you're a banker in London and sit there and not trade. You can't. If you don't trade, you don't make money. So institutional traders, professional traders trade differently than retail, but they still have the same aim. If you don't trade and markets don't move, nobody makes any money. So they have to constantly move, and everyone's looking for that edge. So, I mean, what I'm trying to kind of put across is from a very, very, very simple perspective. If we start with the highest time frame, I like to look at the monthlies, and you build up a strategy of how I think gold's going to trade in the future. First thing I do is look at the highest time frame, which is the monthly for me. So look at the monthly and say, right, well, from back in January 2009 to the high, yeah, this is where we've gone. So I know 80% of the time, this strong directional up move that I've identified from the low to the high will retrace to 50%. So it's done that. So now it's done that, what do I think is going to happen? Well, if it continues to hold below at 50%, then it has to break this low and make a new low. Okay, simple as that. That is the Fibonacci rules. So will gold break, you know, $694? I don't know, but I'm just talking from a technical perspective. That's a long way to go. In the meantime, I might just want to make some money out of short-term trading, day trading, intraday trading. So what do? Well, we start to build a strategy. So I'll say, well, of this monthly chart, where else can I find significant points of interest? Well, I think that is probably a significant point of interest where the market has found good support and resistance. So I'll put that in. And then below that, maybe that. You know, again, just draw it in freehand. That's a good point of support and resistance. So on monthly chart, yeah, I've picked out that if gold is holding below this 50% pivot level and it's got to get to $1,000, if it breaks that, then these are the most likely points monthly traders or long-term traders are going to find support. Very, very easy. Okay, do the same. Go into the weekly chart. What can I see from this weekly chart that's going to bring some interest to me? Well, looking back in the charts, not really a great deal. We've got some lows down here, but they tie in with the monthly levels. So maybe I'll leave that alone. Go to the daily. Okay, so pick out some points of interest on the daily. Well, again, because we're in a downward manner and making these fresh lows, there's nothing really, you know, if you scroll back, that you can find. So, okay, we've gone through the monthly, weekly, daily. Everything's telling us we're going down. We're making, you know, consecutive lower highs. So all we're doing in gold is looking for high points in the market to sell. So straight away, I'll go to my hourly chart and say, well, that's fine. Okay, so I want to sell high points in the in gold. So there we go. Find some high points. Resistance, resistance, lower high, lower high. So what do I do from this point? I sell gold. I've got my Fibonacci point here, nicely from the monthly level. You know, the 61.8. So we know the 50% is acting as resistance. So this also should act as resistance. So the more we close below this level here at 1166.97, then looking to sell. So my stop would be here. 65 ticks up, yeah, at 1173.15, and my next point of interest, there we go, it's not until 1110.12, and that's from a monthly level. So that'll take out these lows here, yeah, so it might be a longer term trade, but again, if we can see that gold is going down every time from a monthly, weekly, daily perspective, hourly perspective, when we hit highs, we go down, well, then what do you think is going to happen? Yeah, draw a simple trend line. Every time we get high, we go down. So this is how I build my strategies. It's called all time frame trading. Going out to the highest time frame that we can, picking out the trend, and then following it through the charts. I mean, this isn't difficult stuff. Yeah, if a week, you keep seeing consecutive weekly closes lower and daily closes lower, and that fits in with the monthly picture, then obviously that's going to filter through to the smaller time frames. So right now, I'm going to be selling gold high, getting towards these monthly fib levels, these upper hourly levels, or any kind of trend I can draw. That's fine, because all the trend is screaming to me we should go short. Okay. Now there's loads of other ways of making your charts, you know, much more attractive. So again, not trying to go into sales mode, but I invented iView charts because I was sick and tired of saying the same things over and over again. It gets boring. When you've done as many webinars as I have, it's very hard to answer the same question time and time again. So I'll put it into charts. My philosophy is that I use Bollinger Bands, Fibonacci, RSI, and that's pretty much it. Okay, as you know, I heard in previous presentations, you can get too hung up on trying to find the perfect technical setup, and you put too much on your charts, and you end up having contrary signals. I think that's very, very true, and very easy to make that mistake. That thinking more on your charts, you know, gets you better signals. It doesn't. So I spent almost 18 months defining my iView charts recommendations, and it made them the charts like this. I mean, pretty simple, to be honest. We've got Bollinger Bands and we've got green and red lines. So what do we do on the red lines? Yeah, after 3, sell them. What do we do on green lines? That's right, we buy them. So I can't make it any easier than I have done right now. Okay, the charts look simple because they're designed to be simple. I don't need to put too much on the charts to put my point across. We're looking for value, looking to follow a market from the higher time frames to the lower time frames, predict what happened in the past to profit in the future. This is what it's all about. Now, I've got 3 simple products here. We've gone through gold, so I've got the S&P up, and I've got the euro dollar. Now, these are hourly charts. Now, hourly charts are great for me because they give you a nice rounded time frame in order to kind of go through your signals. If you're an intraday trader, you don't need to look at the 5-minute or the tick chart or minute chart. It's too much noise. Yeah, you need to take that step back. So if you look at the 15-minute chart, you can see an hourly signal being built. Every 4 15-minute closes, you get an hourly signal. Yeah, that's fine. Yeah, that's what you need to do as an intraday trader. So looking through on these charts, you can see, yes, that's absolutely fine. I understand what I'm trying to achieve on these hourly charts. I know the highs and the lows. What I'll say is, what I like to do is just pick one product. Let's pick anything. Let's pick the Aussie dollar. Never trade it, doesn't matter. So I'll bring out 3 Aussie dollars. So if I'm teaching anybody to trade, this is how I do it. Start off with your daily chart. Yeah, put a template for the daily. I know support, resistance, because it's all on my chart, on my template. Then the hourly signals are the best for intraday trading. They give you a good idea where the market can go to and what it's trying to achieve. Yeah, and then the 15-minute. 15-minute allows you to get a good, tight, concise points everything in trading. Okay, trading's not about being right, it's about being right at the right time. I can look at a daily chart as you can and say this market's going down. You can sell it and lose money. That's what makes trading ultimately so frustrating. From my perspective, I'm just like everybody else. It took me a long time to learn trading, and being the person I am, I had to learn the hard way, and that cost me a lot of money because I was contrary. I thought I could reinvent trading. I thought I knew more than everybody else. It took me years and hundreds of thousands of pounds to learn what everyone else does. You don't know more than the market and you're not more powerful. So that's when I switched my entire strategy around and said, I don't know. I don't care if I'm right. I don't need to be right. I don't need to be validated in that way. What I'm trying to do is understand what everybody else in the market is doing, yeah, from a technical perspective. And when I understand that the majority of people look at Bollinger Bands, moving averages, yeah, support, resistance, RSI. Once I know that, I know what the market retail is trying to achieve. Then I know the institutional know this and are smarter and have deeper pockets, so they will just manipulate the extremes to take that extra money. So once I know what the institutional are doing and the retail doing, Steve Ruffley, I'm back. I'm back in the seat of power. Because if I understand what retail and institutional are doing, then I understand both sides of the story. Then I put in my technicals, put in my fundamentals, I know the whole shebang. So again, once I'm confident in my my technical view, which comes from my charts, my strategies, then any new news, I'm fine because I know how to deal with it. 20% of the time, fundamentals move the markets, but it's not a lot in trading terms. You've got your non-farm payroll, you know, maybe your GDP, maybe, you know, your ECB, Bank of England, FMC. You know, that's not a lot of time to focus on. The rest of the time, the market is going to move between these lines, yeah? Support and resistance, where it's been in the past, where it's going to go in the future, yeah? So what I'm looking now is saying, understanding, right, the Aussie dollar. Yeah, bring that Aussie dollar chart up. What's the trend? Down. How do I know that? Because the market's going down. It's as simple as that. So I don't have to be some rocket scientist genius to know that. It's been from here to here. So again, what do we look for? Fibonacci. So taking the low to the high. So your pivot point hasn't been hit yet, 50%. So the market is either going to make new lows and carry on these lower highs, or it's going to bounce back to that 50% to be a pivot point. So it doesn't matter either which way. That daily chart has done its job. All I need to know is we're trading below the 50%, but we haven't made new lows, but the overall trend is down because it's gone down. I don't need to know any more than that. I look at my intraday charts, my hourlies. Okay, so well, the overall daily trend is down. We haven't hit that 50% mark. What do I do? Well, that's right. I sell highs. So I look for high points in the charts. And it's no coincidence that my Fibonacci indicates 50% pivot of the hourly formation. So once we're below that, these are where you buy back. The market gets down to these lower levels. Pretty much as simple as that. And again, red lines indicate selling. Green line, take your profit back. I don't know how simple I can make a chart. Now, as I said, that's the hourly, which is for me probably the best and most rounded way of getting your technical points of attraction. But your 15 minutes is just the same. Your 15 minutes better for your entry point, because obviously it's a smaller amount of time and you get more confirmation as the candles close. So we can see again, I've got the same indicator running on the 15 minutes. So it looks the same, but it's slightly different. It just, points to sell. So all this area here, okay, well, maybe we're going against the grain. Yeah, okay, we're taking an offside position. But time and time again, we take an offside position from this line. We go, I mean, come on, guys. 9.6 ticks offside. Then already, yeah, back to these lower levels. And again, you can tell it's trade technically by how it finds support and resistance on these lines. So back to the pivot, 19 ticks. So we've risked 9 ticks to make 19, and then profit target 30 ticks, profit target 45 ticks, profit targets 68 ticks. So 10 ticks to make 70, 7 to 1 risk reward. Hello, I mean that's worth getting involved in. So you're looking at the daily, yeah, to understand the overall trend, trying to pick your pivot and kind of key technical levels from the hourly, then your entry point for the 15. Now, the whole point of my strategy is they can be used on anything. So that's the Aussie dollar I picked at random. You want to do that on anything, you can. Anything that Metastock offers. Gold, daily, yeah, hourly, 15 minute. What's the trend for gold? Down. What's the high points? Pivot point, 50%. Lower high, lower high, lower high. Sell the high points, buy back at the green. 15 minutes? Some entry points, anybody? Yeah, institutional traders here. Institutional traders. How do I know they're institutional? Because they move the market much more than a retail trader can do. So if I know this is a point of resistance, and you know it's a point of resistance, if I'm back in, trading like I used to, my £1 million account, if I didn't want people to get short here and I wanted to get, short from up here, I would just keep buying. Because I know the overall trend's down. So I know greedy people will get out and take their profit, but people will be getting short knowing the overall trend around these levels, so I'll just push it up. I'll just keep buying it for another 19 ticks, because I know if you have ever Googled risk, you know the same as I do. Yeah, risk reward is generally speaking 1 or 2% of your account capital you should use on each individual trade. Now, if I know this, if Steve Ruffley knows it, you don't think hedge funds know it, banks know it, everybody knows it. So I know that if you're understanding trading like I do and you're getting short at these levels, then I know, as institutional traders know and big traders know, they can take 1% risk in a very, very quick amount of time out of the equation. Get everybody who's at 1 or 2% risk and short out, get them stopped out. They're called stop grabbers, pin bars. I'm sure you heard of these phrases. Bang, 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 bang. Market goes to the top, then does nothing. 1, 2, 3, 4, indecision, 5, 6, 7, 8, 9, 10, 11, 12 hours of selling. 12 hours. So I've manipulated the market 259 ticks to get all the short-term retail traders out. I held it for 11 hours and I've made 1,100 ticks. Now that's smart trading. That's how the banks work. That's how institution works. That's why banks make billions of pounds of profit, get fined 2 billion quid and just shake it off. They don't care. That's the cost of doing business. What you have to understand as a retail trader is how to read these signs. So if my levels are consistently strong, and tell you where the high point is, you have to build in that tolerance so the trend is down. Yeah, the hourlies again are your good solid signals, but what the hourlies don't give you is the 15-minute view, because hourlies can be manipulated. So this looks as strong as you like, this candle up here, that could close really, really strongly, but doesn't. It retraces 50% of its candle body and closes down here, then the next candle's red. So you have to see how that builds up on your 15-minute chart to see if the market's being faked out. Yeah, so this candle doesn't give you the full picture. You get a better view on that 15-minute. Up, consolidation, up, down, and it's down from that point onwards. So that's why you need to look at the right time frames. One of the most common questions I'm asked is, Steve, what time frames do you use? And I say, well, guys, I use them all. People hate that. People hate it when I say that, but what else can I say? I do use all the time frames. I just don't use them in the same way everyone else does. I don't sit here with, I've got my 3 screens in front of me. That's enough. I don't need 8 screens. I don't need 100 charts. I can get all the information I want off this hourly chart, because all the levels that are brought up from a monthly chart that you can see here, points of interest, I just drag them through. So that's what iView does. It takes information of considerable points of interest based upon Fibonacci, based upon pivot points, based upon my own technical instruction from every chart. So it looks at a monthly and goes, fine, that's interesting. Looks at a weekly. Yep, same scenario. Whatever's interesting on its weekly chart, I take it. And then as you go through your charts to your hourlies, yeah, all these lines are dragged through. So this is a weekly point of interest, daily, weekly point of interest. How does the market react around it? Well, you tell me. Support, resistance, bang, down. I mean, that is a great level. Okay, now this what makes it iView charts kind of unique. And as I said, I've written software for Metastock, for MT4, Chart IQ. I've been doing this stuff for a long time, and it's amazingly difficult to make people understand my kind of theory, my understanding. The only way people ever really get it is by talking through it like this, is showing blank charts, going through the monthly, weekly, daily, down to an hourly and 15, and then showing you, showing you how you can then put this framework. Anybody can do their own iView charts. Anybody. All you have to do is start with a blank chart, as I've shown you, and then put them levels from the monthly, weekly, daily down. But it's massively time consuming. My whole point is that technology is there to make our lives easier, okay? To make our time, much more efficient. So instead of going through every single product, single time frame, I've just written an indicator to do that. So that's what it's all about, making your time much more efficient and more profitable. Spend more time understanding the fundamentals. Spend more time refining your strategy rather than doing the donkey work of what is a point of interest. Again, I could sit here and reinvent trading for you. I can try and say that, yes, Steve Ruffley on the TradingPub on the 13th of November is going to reinvent trading and tell you something amazingly new. I'm not. Nobody can. There's nobody that's going to feature on the TradingPub that's going to tell you that they've got something new. And if they do, then why would they? If I knew everything about trading, why would I do this kind of stuff? I'd be on my yacht, sailing around the Caribbean, making £1 million a day. I've made a lot of money from trading, and I live on the beach and live in tax havens. So that's proof enough for you. So, I don't need to prove any more than that. The reason why I do a lot of these things is because when I started in trading, I was looked down upon. I'm from the north of England, and when I went to London, people think because you've got a northern accent, you're a bit thick. So when I made lots of money and became people's bosses, it's quite a nice feeling. And now I get to speak at shows, I get to sell my software, I get to write books, and it's actually quite nice. It's quite nice to be able to say, I'm good at something, and this is how you, anybody, the average person, can interact and get involved. Now, I can't say I'm going to make you rich. Nobody can. All I'm trying to do is say that all these difficult technical terms, all these difficult bits of jargon, it doesn't really mean anything. Trading is just buying something at value or selling something at value. That's all it is. People love to make this subject overly complicated, and they can justify the high salaries, they can justify all sorts of things. But in all fairness, really, trading is just trading. Yeah, it's just finding value, and that's all we're ever trying to do. I mean, I guess at this point, has anybody got any thoughts or any you know, kind of questions you'd like to ask. I mean, I don't want to just spend the next half an hour, you know, reeling off my thoughts and, you know, what I say. You know, these sessions, you know, I've done lots of them, are meant to be interactive. You know, we can go through individual products. You know, if there's something you want to go through, I'll show you how I would analyze it, you know, again, with and without my indicators. Like I said, it's not a sales pitch for iView. You know, I'm the sole owner. iView's paid for itself 100 times over. I'm not like, you know, any other product or person out there. You know, I find it a useful tool and made it for me. And the fact that other people use it and make money, you know, is a great ego boost. I mean, is there anything you guys would like to kind of come out with, or, you know, or say, you know, is any product you want to go through? You know, have you got any FX traders? Have you got gold traders, indices traders? You know, what kind of people have we got in the room? There's 304 people here. You know, that's a good size. You know, it's a good cross section of the trading public. What do you guys want to see? Okay, a couple of kind of things coming through. Is iView charts on platform? No, Mike. It works on MT4. So any free copy of MT4, you don't have to buy any software. You get any free demo version of MT4, and you can run iView charts. What platforms to work on? Yeah, again, TJ, it's on MT4. I mean, it's going to be rolled out. I'm going to make an app. I mean, in contact with some guys in Chicago, so it's going to be an app very, very shortly. And I'm also going to be working with Tradable, one of the other quite well-known kind of trading firms out there. Like I said, there's nobody I don't work with. You know, I'm a free agent. You know, I am the chief market strategist for Intertrader, but that's just really my day job. You know, it's just who I am quoted in the media and who kind of represents my, you know, who I am, you know, out there in the world. But everything I do, you know, outside of that is for my own personal kind of, you know, enjoyment. So writing the software with Metastock, writing software with MT4, you know, again, was enjoyable because I like to put these things out there and help people understand a very, very difficult subject and, you know, really just kind of simplify it. Okay, can we look at VXX, interaction with RSI, quick look at the DAX, do you use moving averages, reversions I mean, what does it cost? Okay, right, loads of questions there. What I will do is it costs $79 a month, okay? So that's how much it costs. There's different packages, different levels of interaction. What I'll do is I'll bring up, let me just look at the FTSE. Okay, and I'll show you some other ways I build strategies and understand. Okay, so just put a blank chart on, no clever you know, programs or jiggery pokery now. We're just a FTSE. And the first thing I generally look at is Bollinger Bands. Now Bollinger Bands are good because the majority of people use moving averages. Okay, so moving average, yeah, it's just a moving average of 20 periods. It doesn't get any simpler. It takes 20 periods and makes an average. Now, Bollinger Bands are clever, and John Bollinger was very clever in this. He did 2 standard deviations around a moving average to indicate bands of overbought and oversold territories. Now, Bollinger Bands don't get sucked into. There's this holy grail mentality of understanding that if you get the right kind of combination of indicators, you're always going to make money. It's not that way at all. And Bollinger Bands, for me, fall into that category because they always look right. But there are lagging indicators, yeah? There's very few predictive indicators. There's only really the parabolic czar, to be honest, the stop and reverse, that has an attempt at indicating what can happen in the future. The rest are lagging indicators, so will take time to filter through to the market. Predicting what happened in the past to predict the future. Yeah? And Bollinger Bands, RSI, MACD, D-marker are all the same. So the Bollinger Bands are just 2 standard deviations around a moving average. So everyone uses a moving average pretty much in trading. So that's why I like them. Because you get A, your moving average, B, overbought, oversold territories. Now they always seem to work, don't they? Eventually, when we break out the upper Bollinger Bands, we generally come back to the moving average in the lower band. But remember, they are lagging. So they're always going to look right. Doesn't mean they're not useful. As I said, self-fulfilling prophecy of technical analysis. If you're looking at what everyone else does, you've got an idea. So if people are buying outside the upper Bollinger Band, you know that at some point it's going to reverse. You just have to be right. As I said, trading's not about being right, it's about being right at the right time. Oversold, get back to the moving average. Oversold, moving average. Oversold, yeah, what's going to happen? Yeah, after me, moving average. That's what's going to happen. Other things I like to use, like I said, is the RSI. So RSI is good because it's Where's my other RSI? One second, guys. There it is. So the way I like to look at RSI is, again, I understand how the average retail trader thinks, okay? RSI is an indicator. Now, indicators and oscillators are just the same thing. An oscillator moves between 0 and 1 and 0 and 100, okay? It just moves on a scale. So an indicator, that's an indicator, Bollinger Bands, but it has no scale, so it's an indicator. That's an oscillator, an RSI, because it's got a scale. So another example how traders like to make things complicated. Oh, I'm using an indicator, I'm using an oscillator, blah, blah, blah. It's like, it's just the same thing. They're just indicators. It's just technical analysis. Okay? The difference is one uses a scale, one doesn't. Now, what we can see is what the market thinks. Now, if you're the average trader, and again, I'm not talking down to anybody. I'm not trying to make people think they're not worthy of, understanding technical analysis or trading. If you're an average trader, you look for information in the same places. You read books, you read things on the internet, you listen to people like me, and I'll tell you the same things because I can only tell you what I know. Okay, RSI moves around 50%. Yeah, the 50% mark as a midpoint, and then oversold is generally 70, and oversold is 30, overbought is 70. So you've got two periods in this RSI scale, and again, these are hourly charts, where the market is going to find some kind of a value, and that is these points here. Okay, so our 70 and our 30 act as overbought and oversold territory, very much like the Bollinger Band highs and lows, okay, the upper boundaries. So what I know is that if everybody out there thinks that 70 is massively overbought, then the market, the institutional traders, can push it further. Now, I generally factor in about 10% for these things. So on the high point, there we go, 80. Now, I just brought this chart up randomly. I haven't prepared this kind of stuff. So you can see here, at this point here, the market thinks, right, we're going to come down now because we're very, very overbought. But there's an extreme to the market, yeah? And the extreme comes in, yeah, when the retail are pushed out because they're all trying to go short to these high points. But the institutional keep it high, keeps it pushed high, goes to the extremes of the market, push all the retail shorts out, and then sell, 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 consolidation, bang. Market comes down to the midpoint, yeah? Institutional traders make their profit. Okay? This is something that you can cycle through the charts and see all the time. Yeah, it happens on the highs and the lows. Okay, generally moving between these extreme points, these overbought and oversold territories. But the extreme points are here, time and time again. People will get involved in the markets here. This must be a good place to sell because we're massively overbought. Market then goes, no, no. I know you think that, so I'm going to push it to these extremes here. Then we open with a gap. Market obviously, okay, comes back up, but then, continues to sell down as the RSI does. So that's one way I start to build up my strategies is by using the RSI. There's another thing that isn't used that much, but I'll just show you now, and it's called a Dmark Indicator. The Dmark Indicator is very much an oscillator, just like the RSI. But for me, it just gives a bit of a sharper idea of where the extremes of the market are. So very much, as I've said to you, the way I build up my strategies, software, and that kind of stuff, what I try and do is amalgamate things and use things like the RSI in conjunction with a demarker. Use Bollinger Bands in conjunction with Fibonacci. So I just don't rely on one indicator. It's not simple enough to use one indicator in the market. And again, you don't want to get stuck in the point we're using too many. So what I like to do is say, like, I like the RSI, demarker, and Bollinger Bands, okay? But they're essentially the same thing. They're showing you overbought and oversold territories within parameters. So why can't I use them all together? So that's the way I go, and I speak to some very, very clever guys, much cleverer than I am, to be honest. Rocket scientists, mathematical programmers, to say, right, well, this is what I understand from the markets. Yeah, and help me understand where it is. So just the same principles. You've got the Dmark indicator here, and we're just using the same kind of principles that 0.70, because that's 0 to 1, the demarker, instead of 1 to 100. And 0.30 is the oversold. I mean, again, slightly different terminology. When we're talking about RSI, we're generally talking about overbought and oversold. With the Dmark, it's more of a trend type indicator. So what we're looking for is a bear reversal and bull reversal. And again, I always factor in that 10% to find the extremes. And again, you can see the D-marker here is actually quite aggressive in the FTSE. So we actually go, significantly higher to these points, and we get up to 87. So that's almost, 17 points again over what the general market consensus is for a bear reversal period. So again, what we're looking for is the RSI, to show us in a bit more of a lagging style indicator, and then using the peaks in the D marker to understand when them points in RSI can come into fruition. So, just take it back in the charts that we say, a real big spike in the RSI and Dmark here. Yeah, well, that's great. Everybody's buying, but we look. After that, the trade is a sell. And we're 1, 2, bit of consolidation. But, if you're selling at this point, we broke outside the upper Bollinger Band. We know what happens on the hourly Bollinger Band. We break above it for a period of time. We get back to the moving average, then eventually back to the lower Bollinger Band. So that's a signal. Yeah, we've broken and closed outside the upper Bollinger Band on the hourly. How does that coincide with the Dmark and the RSI? Peak, peak, right? So what do? We get short. Well, from that point, really, that's the high. You go 22 ticks offside to make, 2.2 to make 55. So there is no risk reward in that. It's basically selling the high point and the break of the hourly Bollinger Band on an intraday basis, then using the extreme of the RSI and D marker to pick out them tops and just to sell. So even if you only make 20, 30 ticks, it's fine. You're still making money with relatively little risk. Okay. A couple of questions coming through, so let me just go back to that. Does your program automatically plot support resistance lines in each time frame, or do you have to redraw them manually? No, Chris. I mean, the whole point of the system is you can use it on any time frame and any product, and it reads the market, so it changes with the market. It predicts what happens in the past to give you a workable framework for the future. So it's completely automated. Yeah, I mean, Fib is one of my main strategies. I like Fibonacci because I understand it. Okay, Fibonacci, I understand it because of maths. I understand it because of nature. I understand it because it's a relatively simple set of instructions. What a lot of people confuse Fibonacci with is a way of predicting the future, but what they don't do is predict the past. So they don't really pick out the proper parameters to use a Fibonacci. If you're using Fibonacci in the wrong parameters, it'll give you the wrong outcome. My rules of Fibonacci state that 80% of the time, a strong directional move will retrace to 50%. Yeah, 80% of the time, for me, in my life, using this strategy, it's worked. 80%. Anybody would take that as a good trading setup. The whole point of how I use that Fibonacci is I've identified the parameters, a strong directional move. Now, I've identified that strong directional move. Okay, that'll be different than your interpretation. It'll be different than John Bollinger's interpretation. Everybody. But what I've tried to do with iView is put it into, and again, I've had quite a privileged, view to the trading world. I've managed 144 top city traders. So all these guys that we all love to hate, making £1 million a day, I was their boss. So I know what they do. I know how they make their money. I've taught in excess of 1,000 retail traders how to trade. So I know how to stop them losing and make them money. So all these things I've learned over the years, I've put into software because I don't want people to make the same mistakes, and I understand. And it's only a framework. Each trade is your own. Okay, I'm not saying that just because my levels are green or red, you have to buy or sell. You do whatever you like. But if you use my framework, it doesn't just save you bundles of time. It gives you an idea of how to interact your strategy with the market. So you don't start buying tops of markets. You don't sell bottoms of markets because you understand where value is. Because I've just explained to you how it works. Yeah, don't start buying here when the market is telling you we're at an extreme, ready for a bear reversal. We're massively overbought. We've hit an extreme in the market. Why would you buy even though it's a green candle? Yeah, you're outside the hourly Bollinger Bands. Everything, excuse me, this market is telling you is to get short. But it's timing. Yeah, It's timing and understanding. So you get a short after this, and sure, you're going to have to wait probably 5 or 6 hours to maximize your profit, but you've taken very little upside risk. The market doesn't start to make new highs until here, 2 or 3 days later. So it's not about being right, it's about being right at the right time and calculating your risk. Okay, I have a couple of clients currently that have lost phenomenal amounts of money. Okay, hundreds of thousands of pounds. And it's quite distressing to hear their fears and that kind of stuff. But you know, ask some simple questions like, how did it get to this point? When did you press the button to get out? Where was your stop? Oh, I don't use stops. Sorry? Oh yeah, I don't use stops. How can you get involved in trading if you don't use stops? I mean, what, are you some sort of, you know, Warren Buffett style investor? Have you got the money of Bill Gates? What, are you just going to put your money and battle against some of the biggest markets, banks, and investors in the world and just trade without a stop? No, that's not going to work, is it? So the whole point is, what I try and understand by the markets is understand people's pain thresholds. Average people only really work between 1, 2, 3% risk of their account capital. So any kind of spikes in the market are designed to get people out. But if you understand indicators like this, you can start to get involved in the markets at safer places. And that's all we're trying to do. You know, you sell this high here, that's a safe place. You only go offside here. The rest of the time, you can take profit anywhere you want, even here, and you've still made money. And yet your Bollinger Bands give you a midpoint and a lower boundary to take it. Yeah, but that is Bollinger Bands. You can't just trade off that solely. You would pick out that Bollinger Band as a prime example of a break and a place to get short in the FTSE because of this spike and extreme in the Dmark and this spike and extreme in the RSI. Of course, they're going to correlate at perfect points like this. So what you don't want to do is get involved when it doesn't. So we've got a spike here in the Dmark. Yeah, but the RSI is really just on the, you know, overbought territory and coming down. So yeah, okay, it's fine. We come down a little bit, but the market goes up. That's like talking about divergence. What you want is the extremes. You don't want to get involved in the little petty nonsense moves. You want the big, solid, concrete, scream in your face, bang, bear reversal, bang, overbought, bang, outside the Bollinger Band, sell it. No, because everybody then is jumping on board and pushing that market down. I've got some other kind of I've got some other things I'll show you. Again, I mean, what I like to do is, you know, mix things up, and you know, again, it's all about for me trying to present things in a different way. And sometimes I present them in a different way and they become boring. That's one of the real problems I have is trying to make trading interesting and exciting to people. You know, I'm basically an entertainer. I'm here to give my points across, give you all my credibility, all the money I've made, all the things I've done. Oh, aren't you great, Steve? You know, it gets boring after a while. What I'm trying to do is make trading as transparent as I can. And sometimes when you do that, it actually becomes boring. So the latest indicator I've made is this grey indicator. And it's grey, it's boring. And everything grey means you shouldn't trade. Okay? Stay out. There's nothing for you in this market. So blue is where you take your profit. Okay? So we just cycle through this chart. There's nothing. But bang, all of a sudden we see a red signal. What does that mean? Red, sell. Okay, market goes up a little bit, but really, you know, on this hourly chart, we're hitting the tops of the market. Okay, so we don't see anything. We go very, very small offside from these highs. Then the market comes down to these low points, and you end up taking your profit down here. Okay, so you can take your profit here. Again, it's your personal interpretation. But even if you just follow the indicator verbosely, you know, without any kind of, you know, instinct at all, you're still making 81 ticks. Now, that's fine. Again, and the grey area means boring, stay out. Red areas, get involved, selling action. It's not always perfect because no indicator can ever be perfect. But again, here, see a bit of consolidation, market pips up, but you won't lose that much money. So what you're looking for, selling areas, take profit. Buying areas, yeah, bang, market here, gaps down. Again, you've got to look at your risk reward profile. I mean, the indices are not amazing for these kind of things, I guess, but you know, you buy here, and you know, you still, you know, have an ability to make, you know, 65 ticks. Yeah, but the market then grayer and comes down, but you know, it's still, you know, kind of making these higher highs as it goes up. So there will be no indicator that's absolutely perfect. But what I try to do is make trading, you know, a lot more visual for people and say, right, well, you know, if you don't want to trade the FTSE today, well, don't trade the FTSE because it's grey, nothing's happening. What else should we trade? And again, when you've got indicators indicators like this, the way my system works and the way MT4 charts work, you know, it's dead easy. You can say, right, well, I trade the euro dollar. I should have sold it up here. Oh, should you, Steve? Yeah, well, there we go. Sell it here. And what do we make? Sell it here, all the way down, 93 ticks. Yeah? Didn't get involved here. Didn't get involved here, but I sold. Oh, what else do you do, Steve? Oh, I bought it. Told me to buy it down here. Oh, that's right. Get stopped out here, maybe, potentially by the stop grabber. Again, institutional, knowing what the market should do, trying to get people out. You know it's a stop grabber because there's big body and indecision. But when we kind of rest and come to a close, you're not taking that much risk on, to be honest. Yeah, get long here. 21 ticks to make 62, 90. Yeah, 132 ticks. Yeah, that's a 6-7 to 1 risk reward ratio. That's fine. My average is 2 to 1. That's the minimum you should do. Yeah. What else do we want to see? Anything. Doesn't matter what it is. Pound. Sell. Oh, sell up here and buy it back. No problem. Dollar Swiss. Sell. All right. Let's sell some stuff. Right. Okay. Stop grabber. There we go. Institutional stop grabber tells us to sell. Okay. Market picks back up. Support becomes resistance. Then the real money happens. So you have to build in your own tolerance. And that's why I say my indicators, my methodology are always meant to factor in the unexpected. We all know what's going to happen after a good or bad non-farm payroll. But how many times? I've traded 42 consecutive non-farm payrolls, right? I've only ever lost twice. They were relatively small losses. But if last example was, you know, quite a good one because, you know, everyone was talking up the non-farm payroll, expected around about 240. People were saying 280 and it came out 214 or whatever. So it was lower than expected. So the market actually, the S&P actually went up. It actually ticked up about 20, 30 ticks because everyone knows the rules of the game. Everybody knows that you're going to be able to squeeze out any particular retail short-term trader if you go 30 ticks offside on a bad non-farm payroll because everybody will be selling a bad negative non-farm payroll. Because it's the good news, bad news principle. It's all about what we understand. Non-farm payroll is down, less jobs created, worse for the US economy, worse for the global economy. S&P stocks go down. Okay, so the stock, after the announcement, go up 30 pips in a straight line. Everybody who's short is out. But then the institutional, professional traders come in, sell them high points, and push the market back down. So this is just an example of that. We all know the markets are massively ready for a reversal. My grayer indicator is telling you it's a time to sell. We've gone from the highs to the lows. So the market then goes, yeah, we're coming down. Then all of a sudden, go down really, really quickly. All people are taking the profits. Then institutional push it up in one spike. Get all the shorts out of the market. People think, well, maybe I should be buying this. I'm wrong. And then, bang. Where the spike kind of closed and came back, sell back down and go on to make fresh lows. You know, again, usually Fibonacci. You know, up move starts here, so the high is here, looking for that 50%. 80% of the time, a strong directional move retraces to 50%. Yeah, there it is. And that, again, you know, this is a random chart using my 80, percent Fibonacci rules that you cannot tell me that's not a decision point in the market. Yeah, look how it technically trades. Support, resistance to the pip, and then continues to make new lows. Okay, and as I say, it didn't make fresh lows just yet. But look how this 50% is acting. Can't get to make new highs. 38.2 acting, 50% acting as really, really good resistance. So your point is now in the dollar Swiss, we're just looking to break this low point. So where are we going to go from that low point? Well, zoom out your charts. Go to the dailies. Okay? Well, what was the next point of interest then? Well, I would say probably these lows here. And then got to say that. Back to your hourlies. There we go. So if the market breaks down from 0.96121, then we're going to get to 0.95643. There we go. You know, that's how you build up strategies. And sure, we can put the RSI and Dmark on to kind of sharpen these things up. But I mean, again, the gray area indicator is telling us that there's no buying. There's no buying involved. There's either stay out or sell. So we sell, take our profit here, sell, take our profit here. Bang, bang. In 3 days of trading, you've made about 200 ticks. Thanks very much, Steve. Aren't you a genius? Well, no, I'm not. Because The easy part is looking at these things in hindsight and then saying, of course it works. The difficult part is doing that in real time and making money. Yeah, that's the difficult part. But my job that I've taken upon myself is to educate people and to show things in an understandable way. So I'm not trying to be clever and say, oh, aren't I good because I've written loads of different pieces of software called clever names. Not interested. I call it the grey area to make it purposely grey and dull. If it's grey and dull, stay out. We all should be excited about trading. Want to get involved in trading, get involved and make that money. So when it's grey, we stay out. We look for something else. Yeah? Dollar CAD. Yeah, same scenario. Sell. Look at this down move after this. You know, buy at the bottom. You know, what do we want, people? You know, it's like there's so much money out there. But if you're prepared, if you're planning the right way, and again, you know, this is, you just put my, you know, my kind of chart framework around it, and all of a sudden, you know, these things become, you know, they become frustratingly, you know, not simple, but when you present things in the right way, you know, you're looking for the market to sell up here. We haven't broke the Bollinger Bands. Yeah, bang, a daily point of resistance. You gap down. It's telling us before we gap down to sell. Bang, we've already made this gap. We've already made 45 ticks. Market then continues to go down. Where's it going to go to? The Fibonacci levels. You tell me these Fibonaccis aren't working. Tell me they're not. So the whole point is, it's about using all the different indicators in the right way. So there's nothing apart from my grey area, which is my own indicator. I use all the tools that everybody else knows about. I harness that self-fulfilling prophecy and nature of technical analysis. I understand what the market's trying to achieve, and the majority of people, then I turn it on its head. Okay, so I use Fibonacci on the hourlies and the 15 minutes. I use different indicators to get my support and resistance on the weekly, monthly, and daily charts. Yeah, and I combine it. So all the time I'm picking out the best bits of the indicators, the best bits of the different time frames, and putting them on manageable time frames to trade intraday, which is hourly and 15. So when you start doing that and using things in the right way, it doesn't matter if you're the best or worst trader in the world. What you're understanding yourself is that you're trading off the back of the majority of the market sentiment. And once you understand that, you're a really powerful trader, because you're not just out there on your own, sat in your underpants, you know, trading away at midnight, thinking, I'm going to get this super secret dastardly formula that only I'll ever know about. Who cares? You've probably got a poxy little account, so what are you going to do anyway? Nothing. Nothing. If you had a super secret formula, you go and sell it to a billionaire who would give you, know, a massive fund. So you just need to stop that kind of thinking. All we have to understand is what everyone else is doing, and then trade with them when they're right, or trade against them when they're wrong. That is all we're trying to do. And my system, my indicators have come about them. I've just gone through, you know, in a fairly kind of roundabout way, how I've come about them. And it's all from the different time frames, all from using things you've all heard of, Bollinger Bands, Fibonacci, but it's using them in the right way. And the right way, I mean, I have to be humble about these things. The right way, only the right way, because I've lost an absolute fortune proving how not to do it. So when I make money, I know things work. Trading, you know, the money is a bit of a side part to trading. So I only know I'm successful when I make money. So when I'm successful and it works time and time again, it becomes something, you know, of my arsenal. It comes into my iView charts. It comes into my strategy. So really, that's how I came about these things. And as I said, you know, I've wrote a similar piece of software for Metastock. I didn't really kind of get on with the Metastock code too well, to be honest. It was quite difficult to visually put what I wanted. They've obviously come a long way after seeing that heat map. But I found MT4 a lot more kind of easy to you know, to get on board with and to program and to show things visually. And I can't make it any easier than when you see red parts in the chart, you sell it. When you see green parts, you buy it. Okay, I mean, it looks amazingly simple, and sometimes I get a little bit embarrassed by showing it because I take these things for granted. But I mean, this was like nearly 2 years of my life to make something as simple as this, but simple to use, and anybody can interpret it. And it's any time frame, any product. So you use this for your charts, you can trade in any broker you want. I'm not interested. Yeah, you know, you trade with Intertrader, you know, who I'm the chief market strategy with, you know, trade in IG, trade in Alpari. I couldn't care less. You know, I'm completely neutral from that perspective. you can use my product on any free copy of MT4. Okay, $79 sounds like a lot of money, or maybe it isn't. I don't know. Not a lot of money to me. It's a lot of money to you. Then I'm sorry. You know, I can only charge things at a certain rate, because if they're too cheap, people think it's no good. If it's too expensive, people think it's going to change their lives. You know, and it took a long time to come to this price point. And, you know, there are different versions, different amounts of money you can pay. But essentially, what this gives you is a tried and tested framework that's cost me around about £800,000 of my own money to figure out what not to do. So do what I say, do what the charts say, and you basically save yourself 800,000 quid. That's how these things work. You know, it's leveraging my time, effort, and money. And use them, don't use them. I don't mind. I'm not here, like I said. You know, I like Yanni and Rolly, and you know, they're good guys at the TradingPub. You know, I'm not here for a massive sales pitch. I'm here to tell people how to trade and, you know, how to get involved. And like I said, if you want to just do the euro dollar, for instance, yourself, then, you know, just follow the way I do things. You know, don't have to buy expensive, well, relatively inexpensive, but, you know, just you know, just do it the way I showed you. So hourly, 15 minutes. You know, it's a little bit more intensive and laborious, but it still gets the same outcome. So pick out the levels that you think are good. So don't take, you know, the pin bars. Take the actual, you know, solid points. So I'd say here. Yeah, you know, just go through your charts like this. Find out, you know, good, solid support and resistance lines. Give yourself a framework. So you've done that from your dailies, okay? So daily, lower high, lower high, lower high. So you're looking to sell highs, okay? So maybe we want to put another resistance point in, and that'll be here, okay? So that's your daily. So we're selling down, yeah? So every time the market gets high, look to sell it. So again, do the same. Look for your, oh, sorry, that's a daily again. Do the same on your hourlies. So say, right, well, where's the biggest, most, you know, aggressive move that we've seen? Well, probably, I'd say this one. So we're going a little bit far back in the charts, but it doesn't matter. This is a rejection of the lows into the highs. So again, find that 50%. So 50%, here, a downward trend overall, but the market's looking a little bit bullish now and aggressive. So where's it going to get to? Well, it's going to get to the high, previous highs, isn't it? Surely. So that's there. Okay. So we know that 1.24952. So again, if we wanted to, that was daily. So we could even drag that line across. So that would be 1 spot 2 4 9 5 2. Okay, so that's that. We've taken daily points of interest, put them on our hourly chart, used our fib. So the 15-minute chart, well, I mean, again, we don't have to put any levels on that at all. All we're looking for is right now, we're in a downward move, but we're looking pretty bullish, you know, from the hourly and daily perspective today. So we're just looking for new highs. So we pick low points, yeah, in the 15-minute chart, tie that in with the hourly, and all of a sudden we've got targets, yeah. So our targets in the euro dollar today is we get, you know, up at 115 ticks to here, maybe get 244 ticks up to here, potentially. Or because we know the overall trend, yeah, from monthly, down, weekly, down, is wait for these high points in the chart to be hit on the hourly and 15-minute and sell the high points. So this, again, you know, you don't need any powerful charting package, any kind of clever indicators. You just look at points of interest on the daily, transpose them to your hourlies, and then trade off for 15 minutes. There we go. Anybody can do that. That's absolutely free. Now, to do that for every product and every time frame, sure, it's going to take you back to time. But it's up to you. If you want free, do it that way. If you don't want it free and you want to pay for it, I've already done it for you. So that, again, is how these things work. Okay, just a couple of questions now. Sorry, I've just been on a bit of a talking spree there. Are you saying DMI, your indicators are very hard to read? Right. Okay. No, it's DEM, the Dmark Indicator. I was looking at. Okay, I don't know anything about cotton yen, to be honest. I would never trade that. I'm much more just mainstream stuff. You're trading with the bankers instead against them? Yeah, absolutely, Chris. I mean, the whole point is the bankers, like them or loathe them, you know, they're the one making the money. So there's no point fighting against the bankers. You can't take a bank on and win. You know, even with a big £1 million account, it's nothing compared to the size of a bank's account. So why, why try it? But again, the whole point is looking for them extremes of the market and understanding them extremes are easy to manipulate because bankers know all the rules. I know all the rules. You guys know all the rules. So obviously bankers do. If you had all the money in the world, would you play fair? Yeah, if you could change your trading account now and I gave you £1 billion, would you trade fair? No, you wouldn't. So why do we expect the bankers to trade fair? But what we can't do is control them or get worried about it. All we can get worried about is controlling what we can do as individuals, as traders. Yeah? Keep things within our realm. If you start to, hate the world and hate the system and hate the bankers, then it's taking your focus away. Yeah? Use them. Use the liquidity. I know I do. Okay, Willie's just saying platform ETX Capital shows 3 indicators: Bollinger, Bollinger Width, Bollinger Bands, %B. What should I use? Use the Bollinger Bands, just normal Bollinger Bands, 20 periods, 2 standard deviations. So just the normal first one, the Bollinger. What I wouldn't do as well is tinker. Don't tinker with indicators. No, it's very easy to say that from my perspective, and I guess I'm not telling you guys what to do, but the self-fulfilling prophecy of technical trading works because everyone uses the same information. So if you change a Bollinger Band to 25 or 30 periods, you're not looking at Bollinger Bands like everyone else does. Okay, that might work in your favor in the short term, but you have to trust me. Yeah, as someone that's tried everything, and I mean everything. Okay, thousands of hours. Yeah, I've had teams of people on this stuff. Okay, I make things look simple because that's the only way it works. It's got to be cast iron simple, right? How can moves be anticipated by using grey charts? Well, I mean, it's an indicator. It's like everything else. It's what I've tried to do is make it a little less lagging in some respects and try and be a bit more predictive. So it almost tells you move before it happens, but there's nothing, there's nothing in existence. You have to be talking about, quant programmers and black boxes and grey boxes to do what I've done. I've only got a limited amount of time and resource I can throw at these things. So, I'm in the process starting my own fund. And again, I'm different. I've lots of rich contacts, and I am who I am, so I can do a lot more than the average person. I'm not trying to say this grey area is designed to make people billionaires. It's not. Well, not yet. It's designed to make people just get involved in the markets at the right time. So grey areas stay out, red and green look for buys and sells. That's as simple as I'm transparent. I can make trading. Okay, I can't look at, sorry, like I said, I can't look at cotton because I don't have that on my MT4. Again, just going back to the package, $79. What are the settings for RSI and Dmarker? I mean, RSI and Dmarker are just standard settings, as I said. Use them as just standard settings. I mean, what you're looking for is the overbought and oversold territories. So oversold is 30 and overbought is 70 because that's a 0 to 100 scale. The Dmarker is 0 to 1, so it's 0.3 and 0.7 are the bull and bear reversals, which just essentially are overbought and oversold. So again, my grey area indicator is very similar to the RSI in some respects. Look, the market's telling us here we should buy, yeah, and as we do, the market goes up. Market here is telling us we're overbought to sell, and it comes down. So what it doesn't do, again, it is here we could sell down and we get caught, the market goes up. Here we could sell down, market goes up, we get caught. My indicators are designed to take all that knowledge from the RSI, Dmarker, etc., volume, ATR, and make it a little clearer. There's no 100% indicator. It doesn't exist. Okay, so I'm looking for a 70% edge at the best of times, and I believe that 70% edge with all the indicators, the way I've programmed and the way I use it, that iView charts will give you that. Now, again, it's down to you guys, isn't it? It's down to how you use it and what effort you're willing to put in. There's no 100% guaranteed system, but I think any kind of structure and edge, if you can get it and adhere to it and use it, and that confidence that comes from that structure is worth its weight in gold anyway, because confidence is all about making successful traders. There's nothing worse than an unconfident trader, and having that framework, having that plan, like Dave said before me, having that plan, it's amazing how intelligent people, successful people just turn on the charts and buy and sell without any real plan. So this is meant to be my 80% of trading, being technical, is having this plan. So all you do is put on one of my templates, all the information's there. You know, where to buy, great. Where to sell, I mean, come on. I mean, how easy can I make it, guys? You know, it's what more can I do? You know, sometimes it's like having the best secret in the world and nobody knows about it. You know, I'm still a relatively small company as iView charts, and that's why I kind of, you know, come out to the TradingPub and FX Street and get myself out there. But it's very difficult, you know, to kind of make a difficult subject so transparent, and I believe I'm some way there to doing it. And I think the webinars help, the demonstrations help, but essentially, you know, it's going to come down to you, how you interpret it and how you use the charts to make money. But I mean, come on. You know, you sell the red lines, buy the green lines, bang, 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 bang. I mean, what more can I do? What more can I do? Okay, right. Well, that's pretty much my time, guys. You can see me getting below 30 seconds now. So anything else you'd like to know, guys, just get in contact with the TradingPub, or you can get hold of me on Twitter at Steve Ruffley. Like I said, I'm not here for the hard sell. You want to buy iView charts, buy it. If you don't, then don't. You know, it's not going to make or break me, to be honest. You know, it's one of these things. You know, lots of free education that I do. That's where my kind of passion is. You know, giving this education away for free and building up a following, and you know, making things interesting for people. So I guess, you know, plenty more speakers today. So lots of different insights. Like I said, I'd like to thank Jana and Rolly at the TradingPub there, and hopefully in the future I'll do more presentations. But for me, I think that's my time. I think that's been a good presentation. Hopefully you've got something out of that. And as I said, anything else you guys need to know, just get me on Twitter at Steve Ruffley. That's generally the best way to get me. All right, guys. Thanks for that. Cheers, Jana. Cheers, Rolly. I will see you guys sometime in the future. Okay, have a great afternoon, guys.